So if I was really good at this whole YouTube thing, I'd probably have a train wrecking right now with the song Taps playing over it, because that's basically what happened when Meta reported their Q3 earnings after the bell today. An absolute train wreck. What is going on, investors? Hopefully you guys are doing well out there. And what the hell is going on over at Meta? This stock during the regular session was down over 5.5% to $129 per share. But after reporting their Q3 numbers, which get into here in depth, we'll also come over here and look at this from a stock chart perspective. We had to put in a big old fake red candle here to show you that I haven't seen a drop like this, especially coming off the highs that we were at just 9 months ago, on the 10 months ago on this stock, over $300 per share in the after hours. We're down another 20% on this stock, down to about $104 per share. That's after a year of being down 58%. We're going to add another 20% to that. That is a 78% decline in just 1 year on this stock. From a market cap equivalent, that's basically like dropping a Tesla off of your market cap. It's just remarkable what's been going on over at Meta. In the most recent quarter, we had revenue coming in at $27.7 billion. And in fact, when the report was announced initially, the stock actually traded up by about 7 to 8%. So we have a nearly 30% reversal in this stock as investors dug deeper into the report. And that's exactly what we're going to do on today's show. We're going to dig into these reports. We're going to take a look at the fourth quarter guidance. We're going to take a look at some of the expenses that they have planned for the upcoming year as well. Let's compare that to where analyst expectations are and how these are going to be probably well off in terms of what Meta is actually going to be able to achieve, certainly from a revenue perspective, but definitely from a profitability perspective. We'll take a look at the revenues, the profits, and see how much money old Mark is spending on that Reality Labs business, which you are not going to believe from a revenue standpoint how much he's spent versus the dollars he's brought in. It's just a disaster. And then we'll look at this from a technical perspective as well. But this revenue number actually beat expectations. $27.7 billion in the most recent quarter. That is a decline year over year, but investors were expecting a decline. Now, part of this decline we have to factor in when we're looking at all these multinational companies is there is the strong dollar. There is currency fluctuations, particularly with the dollar and the euro, and that is negatively impacting these companies from a revenue perspective, but also from an earnings perspective. But I tell you what, Wall Street is not giving a single company that we're looking at a break on that. So I would not be pricing that in. I would not be using that as an excuse. Certainly it could be a tailwind into the future. Currency stays constant for the next year, or probably better for these companies. It actually reverses. The dollar gets weaker. It might price itself into the stock, I think, almost immediately. But right now, investors don't care because we beat expectations over at Meta on that $27 billion. But I tell you what, investors are really looking at these earnings. They did miss on the earnings side, $1.64 a share. That missed expectations by about 22 cents. Expectations on that revenue side was at $27.4 billion. The high-end estimate was at 28.37. So the company did a nice job from a revenue perspective, and it actually probably beat my own expectations for this company. Now, the all-important fourth quarter, where obviously you have a lot of online ad spending, certainly Meta still being a pivotal place where a lot of traffic happens. And in fact, when you go through the press release, they talk about a lot about monthly active users, daily active users. Nobody cares. Clearly, all those figures look pretty good year over year based on Meta's size and the maturity of those platforms. Nobody cares the daily active users and the monthly active users. What investors are really caring about is the forward guidance with this company, and they expect that fourth quarter 2022 revenue is going to be between 30 and $32.5 billion. That assumes a foreign exchange currency impact of about 7%. So it would have been about 7% higher if you factor in constant currency. But we are looking at 30 to 32 $22.5 billion worth of revenue. Wall Street estimates was actually towards the high end of that range. In fact, the highest Wall Street estimate out of 39 analysts was closer to $34.76 billion. So if Mark is not able to come close to that $32 billion mark, he's going to come well underneath what Wall Street was having to expect for that fourth quarter. And if you've been following this channel for any length of time, certainly after the first major drop this stock had, I outlined extensively here on the channel that the company has a $29 billion revenue problem. After the iOS changes in Q2 and Q3 of last year, the company has not been able to put up a quarter over $29 billion outside of last year's Q4. And it looks like potentially for the upcoming Q4, they might not get much higher than $29 billion. You factor in those iOS changes and the currency impacts, and this company is in the eye of a storm when it comes to headwinds. Now, the other impacts of Meta stock are actually self-inflicted. This company is spending a boatload of money on those metaverse strap it on your face thing that will show you from a revenue perspective is not selling and is not making any money. And if Mark was smart, he would pull the plug on this, or he would do like what Elon Musk has done and done what Jeff Bezos has done and done what many, many, many rich billionaires have done over the years. They have these little side projects that they pour their money into. They don't use company money to do little toy and side projects. I wish Mark had done Oculus on his own with his own wealth and his own money, because now he is using your money, the shareholder money of Facebook, of Meta, and he's burning it on a project that is not going anywhere. And we'll show you that from a financial perspective here in a moment. But he's talking about how the most recent year, it looks like their total expenses for 2022 are going to be in that $85 to $87 billion. That's going to be for this calendar year of 2022. They gave us guidance for 2023. Look what's going to happen. Our total expenses are going to go from to 96 to $101 billion in a year that Meta is likely not going to experience a lot of revenue growth, and the economy is likely going to be weak for the vast majority of the year. They're going to spend up to $15 billion more, over $1 billion per month more on operating expenses. So guess what's happened to that cash flow, to those earnings? I remember when Meta had this major drop, people talked about the price to earnings ratio and maybe even like a price to cash flow ratio. And what they didn't factor in was those metrics, and those were just going to continue to get worse. Well, guess what? I would throw the forward price to earnings out the window, forward price to sales, forward price to anything over at Meta, and throw it out the window, because it's a complete disaster. They're raising their operating expenses next year. Their revenues are likely not to go up. If you have currency still a headwind, if you have macro economy still a headwind, things are going to get pretty ugly, and they're going to stay ugly. And the market is pricing that in right now with Meta with a 20% decline in the after hours. When we start to look forward with this company, Wall Street expects it to reaccelerate its revenues, basically coming against relatively easy comps. But you're looking at a company that is not going to meaningfully get over $30 billion worth of revenue until sometime next year, basically in the fourth quarter of next year. And again, that is a big question mark, and that is a hope and a dream at this point. When we come over here and look at these financials, we'll see in the most recent quarter, you had $27.7 billion worth of revenue. You see here last year, you had $29 billion worth of revenue. So there's obviously red flag number one. You have declining revenues year over year, but it actually gets worse than that. Look at your total costs and expenses. They went from $18.6 billion up to $22 billion. So your revenues decline, but your costs and expenses actually went up. Look at your research and development. That went from $6.3 billion all the way up to $9 billion year over year on a quarterly basis. Your general administrative cost also went from roughly $3 billion up to about $3.4 billion. So your income from operations got cut in half over the last year, went from about $10.4 billion all the way down to $5.6 billion. You flow all the way down to net income, which is essentially profit. You went from $9 billion worth of net income last year on a quarterly basis, which is fantastic. Okay. Now you're all the way down to $4.4 billion, which look, is still good. But now investors have to wonder, Is this going to get cut in half again next year? Considering we're going to tack on another $15 billion worth of operating expenses next year. So conservatively, that's $3 billion a quarter in terms of more operating expenses. So let's just add that back on to this. Let's assume Meta puts up another $27.7 billion quarter sometime next year, and then they have $25 billion worth of operating expenses. Well, guess what? That would take your net income down to about $1 billion, maybe even under $1 billion. Now you start doing your price to earnings, your price to sales, your price to cash flow. I'll show you cash flow here in a second. Cash flow's disintegrating over at Meta as well. It's just an unmitigated disaster over at this company. Now, from a balance sheet perspective, they've still got a little bit of leeway, but we have less cash on the balance sheet than we did back in December. You had about $47 billion worth of cash. In fact, your total assets were about $66 billion. Now you're at about $58 billion. And unfortunately, now this company, which was debt-free, has about $9.9 billion worth of debt. They tapped the debt markets earlier this year at a relatively low interest rate, but you can see why they probably had to tap that market, because they are starting to lose lots and lots of money. So the balance sheet, while it's not upside down, certainly not pristine like it was earlier this year. Now you come down here to cash flows, and it's really, really, really ugly when it comes to Meta, because this was the one thing that you probably could have hung your hat on. Was, yeah, Mark was going a little crazy with his metaverse spending, but the cash flows were really good. Well, those have been disintegrating as well. You see your net income went from $9.2 billion on a quarterly basis last year. It got shed in half. In fact, more than cut in half to about $4.4 billion. You get all your add backs and subtractions. You get your net cash provided by those operating activities over at Meta. Look at last year, you're at a stellar $14 billion. Now you're all the way down to $9.7 billion. And you have to wonder, where are they going to be a year from now as this company continues to ramp up spending, and it looks like revenues have started to stall out. Now, they did still repurchase common A stock in the most recent period to the tune of $6.3 billion worth of shares, but last year it was 13.45. They issued that $9 billion of debt there. They accelerated their purchase of property, plant, and equipment from $4.3 billion all the way up, more than a double, to $9.3 billion. So the company had $9.7 billion worth of operating cash flow, but they burned through immediately $9.4 billion of that just on property, plant, and equipment. That's before you get to anything else on this cash flow statement. That is what has investors very, very concerned. And probably the most concerning thing is when you come down here and you look at Mark Zuckerberg's pet project, Reality Labs. Look at this, folks. Last year, again, this is revenue that we're looking at for Reality Labs. Last year, you had $558 million worth of revenue. Again, this is still a company that's worth like $300 billion. If it was worth $3 billion, we would be really singing the praises of having $558 million worth of revenue. $558 million to a $300 billion company is a rounding error. It's something that they could drop on the ground and nobody would notice. Look what happened to what they are spending the vast majority, because I'll show you, they're spending a third of their operating profits on a business unit that went from $558 million worth of revenue down to $285 million. The revenue almost went down in half, and the company spent billions of dollars on this Reality Labs idea. Take a look at your loss from operations from Reality Labs. Last year, on $558 million worth of revenue, you lost $2.6 billion. Again, that revenue actually went down by nearly one half to $285 million worth of revenue. And now you lost $1 billion more. You lost $3.67 billion after your revenue was cut in half on a business unit that's supposed to be the future of this company. Look at your family of apps. This is Instagram, this is Facebook, this is WhatsApp as well. You had $13 billion worth of income from operations from that segment of business. Again, a wonderful business on a quarterly basis to generate $13 billion worth of operating profits, let alone revenue. We're talking about profits. That is fantastic. Look how that has been cut tremendously from $13 billion down to $9 billion. That means that this company is spending or using up about a third, or actually over a third of their operating profits from their profitable business and putting it into a business unit that has saw its revenues get cut in half over the last year. Mark Zuckerberg should lose his job. He should be fired. And maybe I'm overstating things, but he probably should actually go to jail for this type of financial, at least like financial jail for that type of decisions. It's absolutely idiotic. And there's a reason why the stock is just fallen off a cliff. Look, from a technical perspective, it's in this downward channel. I've tried to trade it. I probably am still a net winner trading this stock, but it gets less and less. And I'm just going to get out of this thing. I don't even think this is worth it from a speculative perspective. You might be able to find ways to make money on this technical chart, but I don't even think it's worth it from a fundamental perspective. There's nothing to like here. I listened to the conference call when Mark is talking about their core business. When it comes to WhatsApp, when it comes to Instagram, when it comes to Facebook, he makes sense. They have good projects. They have good products. They have some headwinds. I think they'll work through them. I think the family of apps will ultimately become a very, very good business. But this Reality Labs pet project, this should have been like SpaceX or The Boring Company or Neuralink to Elon Musk, or like Blue Origin, or to the number of things that Jeff Bezos does. Mark Zuckerberg should have bought Oculus by himself, and he should be running that and spending his own billions of dollars on that. And this company should be generating tons of free cash flows. Yes, the stock would still be down. Yes, it would have headwinds from currency, from TikTok, from Apple iOS changes, and from the general economy, but the stock would not be down dearly and nearly as much as it is, hurting many investors that just simply could not get out of the way of this train wreck. Meta is an absolute no touch after this report. The quarter was decent, but Mark Zuckerberg is absolutely insane to go from about $87 billion worth of expenses this year, thinking he's going to go to $101 billion worth of expenses next year. And analysts are going to be pulling back on their estimates next year. My guess is this company is not going to put up a quarter over $29 billion outside of potentially the upcoming fourth quarter. This company's revenue is going to stall to a halt. When it stalls to a halt and you have higher dollar and then you have higher expenses, well, the company's earnings and their cash flows are going to disintegrate. So whatever forward PE you have on this one, you've got to add several points to that, because it's only going to continue to get worse for Meta before it gets better. At some point, it's probably going to be a pretty decent investment, but right now it's not. Hopefully, guys, enjoyed today's video. I'll be back again tomorrow with Amazon and Apple. Hopefully it doesn't go like this. Good luck with your investments.